Hello guys, what's up with you all? In today's video, I want to show you the kind of trades you should look out to take daily, okay? These patterns are super easy to spot and can fetch you up to 70 to 80 pips every single day, okay? So they are called the London patterns. The London patterns are simply patterns that form after the Asian session. Remember, we've got three trading sessions. We've got the Asian session, we've got the London session, and the New York session. Now, what do I mean? Remember, the market usually starts with the Asian session, consolidates, hitting the top and the bottom of the range. And then what happens, it moves out, breaks the range for stop on high or low, okay, in the London session, then starts the main trend move, okay, and then ends the day in consolidation again, okay. So this is basically the pattern. So this is our this is our Asian session, this is our London session that sets the high of the day, and the New York session that sets the low of the day, and the Asian session again to end the day. Okay, so basically with this in mind, I want to show you the kind of trades that you should learn to take on every single day. We have our Asian session, okay, and what happens? The market consolidates, okay, and breaks the consolidation range, okay, in the London session. Then it gives us a stop point low, okay, and what happens? We have our first level rise, second level rise, and third level rise to end the day in consolidation. So you should be looking out for this trade. Now, what it simply means is that whenever you go to your charts, okay, and you notice, okay, that the market gave you a stop on low after your consolidation, after your Asian range, in your London session, you got a stop on low, then it's time to kill the market with a buy. Or for the sell opportunity coming out of the Asian range, okay, we have a stop on high, okay, and then the market drops, and ends the day in consolidation. So this is the first London pattern, okay? This is the first London pattern. This is the kind of trade that you should be taking. This is where your entry should be, okay? Your entry should be here, okay? When you notice the first and the second legs have been issued, okay, that is where your entries should be. So this is your London pattern type 1 that you should learn to take, okay? So this is type 1 trade. Now I'm going to be showing you examples of the type 1 trade in the market, okay? So let's have a look at them. So this is an example of the type 1 pattern. Coming off the Asian session, what happened? Euro USD did what? It broke the Asian high, session high, okay, and gave us the what? The stop points. Can you see that? Yeah, so this is actually the right place to enter. We have the red EMA, which is EMA 13. You have to just enter the trade after the close, okay, of the candle at the EMA 13. And you're sure of getting at least 70 to 80 pips. Now see how far the market moved. Okay, see how far the market moved. We had level 1, level 2, level 3 drop. Okay, and then ends into consolidation. So this is an example. I'm going to take another example. Now, this is another example. Coming off the Asian session, the market broke the Asian low, session low, and gave us what? The stop point low. Okay, what happened? The market moved up. This is a W formation candle. You enter at the close of the candle above the 15 EMA, like I said. Then we had our what? First level rise, second level rise, and what? Third level rise. And market did what? Ended in consolidation. Now, this is another example. This is the Boom 1000 index, okay, for the volatility. Those of you that trade deriv, I always tell people that this is not about the market maker strategy. It's not about the currencies only. Any single thing that has to do with candlesticks, okay, you can trade it. Now, coming off the Asian session, we got a stop on high, okay, and then gave us the end. Okay, even though it was a rough one, but that's an M. Okay, they have different variation. Now you enter at candlestick close below the 13 EMA and see how far the market dropped. Now this is volatility 25 index, still from the deriv. Remember what I said. So the market coming off the Asian session, The market gave us the stop ons, okay? And then what did we get? An M, okay? Enter the close of the candle below the 13 EMA and market dropped down. So this is a very, very easy strategy. If the market maker gives us a stop on low, we buy. If the market maker gives us a stop on high, we sell. Now for the type 2 London pattern, coming off the Asian session, the market kept moving up and down without breaking the high or the low and moved out, okay, and still on the same line, gives us the pattern and starts going up, okay, starts going up, then ends the day in consolidation. So this is the second pattern you should be looking out for, okay? You should be looking out for this pattern. More often than not, you're going to be seeing the swing 200 EMA around that side. That should give you an indication that we're going to be getting the type 2 London pattern. Okay, so when you open your chart and you see this, you need to start expecting the type 2 pattern. When you notice this, the 200 EMA moving very close to the Asian sell trade coming off the Asian session. Okay, market moves without necessarily breaking the high or low, and then does what? Starts dropping straight away. Okay, so that is the second London pattern that you should take note of. You should get used to this pattern, and with this, you'll be able to make so much money from the market. I'm going to show you a live chart example where this played out. Now for the type 2 London pattern, coming off the Asian session, notice something. We had the high set and the low set, okay? Now, the market did not break, okay, the low. And then what happened? It just started moving. Okay, where are you supposed to enter? The close of the candle above what? The 13 EMA. Do you understand that? Now look at this. This is your 200 EMA. Okay, like we said, once you start seeing your 200 EMA moving close to your Asian box, session box, then start expecting your type 2 pattern. Okay, so that is it. We look at the market move 1, 2, and then 3. Okay, so that's that. Then we'll take another example on the type 2. Now, this is another volatility chart. This is V100S. So we have the Asian session. Okay. Now, the market didn't break the high. Okay. Now, it moved out. And what happened? Gave us our M. Okay. And remember what we said. You enter at the close of the candle below the 15 EM, 13 EM, sorry. So we had our first level drop, second level drop, and third level drop. So that's it. Now for the type 3 London pattern, coming off the Asian session, but then came to the mid, the 50% range and did what? Gave you your M pattern for a drop. Okay, give you your M pattern for a drop. Okay, so that is the third pattern. And then we have our 50 EMA here, 50 EMA, 50 EMA here. Okay, so that's going to tell you that we are expecting a type 3 London pattern. Okay, when you see on boss. Okay, now for the buy setup, the same thing. You have your Asian session. Okay, and then just the midpoints. Okay, we got our W and market starts trading upwards. Okay, and remember what we said, your 50 EMA somewhere around here. So with that, we know what we are actually expecting in the market. So let's take live examples on the live charts. So for the type 3 pattern, coming off the Asian session bus, okay, the market simply did what? Went to the mid-range and gave us our M pattern, okay, and then where were we supposed to enter? Just at the candle close below the 13 EMA. And then what did we get? Market rallied down, okay? Very, very simple stuff, okay? And let's take another example. Okay, so this is a V75 volatility indices chart. So coming off the Asian box, okay, look at what happened. The market came to our M here, and then we did what? We traded away from that zone, okay? So that is that, traded away from that zone. Also, when you look at this place, you notice that we have a type two pattern here. Okay, this is our Asian session bus, our Asian session range, and then what happened? The market didn't break it, but gave us our M. Okay, and then we traded. So if you go back and take your time to watch this video, watch it over and over again, and it's going to make you understand that these things are very, very simple. Remember what I said, the market give you a stop on high, we sell. The market give you a stop on low, we buy. Very, very simple. Thank you so much for watching this video, and I'll see you in the next video.